Hello traders, Gary Wagner here, approximately 11:15 in Honolulu, 5:15 in New York on Tuesday, 15th day of March, 2022, and this is the daily report for gold and silver. Gold futures continued to decline sharply, giving up $41.60 in trading, with the most active April contract currently fixed at $1,919.20. That is a decline of 2.12%. The Federal Reserve began this month's FOMC meeting, which will conclude tomorrow, and will announce the first interest rate hike since 2020. While it is widely anticipated that the interest rate hike this month will amount to about 0.25% or 25 basis points, the key will be the tone of the statement and, of course, the subsequent press conference that will be held a half hour after the meeting concludes. Today, the U.S. dollar was in essence unchanged, losing 0.07%, and the dollar index is currently fixed at 98.95. While trading resulted in a slight price increase in the price of palladium, the other precious metals traded on the futures exchange all experienced price declines. Silver, however, was the least affected, losing under a percentage point, 0.80% or 20 cents, with the most active futures contract currently fixed at $25.09. First, to our trade recommendation issued yesterday, we acknowledged that it was high risk in terms of the probability that we would see gold find support at yesterday's pricing. The risk was very small. We did lose $10 per ounce or $1,000 per COMEX contract. Looking at the 8 trade recommendations that we have made this year, we are still in a very good year-to-date profit, currently at approximately $19,300 based on trading a single COMEX contract of gold. This first chart that we are looking at is a candlestick chart, daily format. We're looking at our 3 basic moving averages. As you will see on the next chart, the correction that we are seeing, it is well over the 38% retracement level, and in fact could trade as low as the 61.8% retracement level, which is still considered to be an acceptable but deep correction in the market. Currently, we do have pricing well above all 3 major moving averages, but we are definitely in corrective territory, considering that as recently as last week, gold was trading at $2,077, approximately $10 below the record high of $2,088 achieved in August of 2020. We have seen a price decline in approximately 1 week of trading of approximately $150 per ounce in gold. And that can be clearly illustrated when we look at a Fibonacci retracement. The data set that we are using is simply the last leg of this rally from approximately $1,780 up to the intraday high last week of approximately $2,078. Today's sharp decline took us below a 50% retracement, and I would expect there to be solid support at around $1,900 per ounce. However, the low today came in at $1,908, and the 61.8% retracement comes in just under $1,900 at $1,893. It will obviously be whether or not the rate hike announced tomorrow is a 0.25% as anticipated, or a more hawkish stance of a 0.5%, and then the tone of the statement itself, whether it is interpreted as an extremely hawkish statement, more hawkish than in the past, as well as Chairman Powell's statements during his press conference. That will be the key deciding factor. I believe that the crisis in Ukraine still is going to support gold prices, and I would expect there to be a floor at around 1900, even if we see further selling pressure tomorrow. However, our recommendation is to sit on the sidelines until the Federal Reserve comes out with their announcement tomorrow and see the reaction in gold pricing to the statement, the interest rate hike, as well as the press conference. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow on Wednesday after the Federal Reserve FOMC meeting convenes. Have a great day. Bye-bye.